Welcome to Thinkers Table, the new podcast covering diverse voices and the most unique stories in deep tech. My name is Ved Lahana and I'm a product owner at One Trading, a cryptocurrency exchange. I have previously been an intern at AWS, an operator of various European fintechs, as well as a Web3 angel investor. Thinkers Table is a podcast covering all things deep tech, from AI to blockchain to climate tech. Each episode will introduce a new guest covering how they broke into tech, their most recent projects, and some lessons they've learned along the way. So join me and listen if you want to get deep into tech. Hey everyone, welcome to the Valentine's Day special I have prepared for you. We have episode 9 with Tim, Bevan. It's a really cool episode. I really enjoyed it. Tim is super knowledgeable about financial products, crypto, ETFs, and generally just a really insightful episode. We also dive quite deep into careers and early careers, which I think is pretty important for everyone listening. More generally, I've been really happy that we've been able to push out episodes consistently and people have been enjoying them. On that point, I'd love any feedback on anything that's missing from the episodes, anything that you want added, any additional guests you want. But I'm really looking forward to the year ahead. I am actually in New York next week to record a few in-person episodes, and just generally looking forward to recording throughout the year. But yeah, hope you enjoy it as much as I did, and see you in the next one. Hey everyone, welcome back to Thinkers Table. Today we have a very special guest on, Tim Bevan. He's on for episode 8, and he is the ex-founder and CEO of ETC Group. Thank you so much for coming on, Tim. How has your Friday been so far?
Yeah, pretty good. Busy, but in a good way.
Yeah, always in our world, isn't it? You never stop.
There's always something happening.
Yeah, there's always something happening. Nice. Cool. Well, I really want to jump straight into it because I know there's a lot we need to dig through, and I know there's a lot of insights that you can give to the audience. So, just to first kick off, for you as a person, it's funny because you're going to have to speak about yourself in the third person, but who is Tim Bevan?
Well, I guess I'm a finance markets professional and have been for the last 25 years. I started my career at the London Stock Exchange, got very familiar with sort of central markets, infrastructure, trade, post-trade, etc. And I got familiar with ETFs. I was responsible for the ETF segment on the LSE back then. And it was actually when the gold products first turned up about 15 years ago that was the kernel of an idea of how to deal for crypto back in sort of 1920 when we were putting ETC Group together. You know, gold is a single asset, non-UCITS eligible, so same challenges as Bitcoin really.
Mm-hmm.
That was when the exchange traded commodity structure was born. It was Graham Tuckwell and ETF Securities came to market with this. And yes, it occurred to us that this is fit for purpose, right? It does the job. It's got institutional acceptance. It's been around for a while. No need to reinvent the wheel here. You take gold out of a vault, you put Bitcoin on a cold server, and you have a product.
Indeed.
But from LSE, I then moved into sort of investment banking brokerage. I was quite specialist in the Russian market for quite a while. I was CEO of BCS, which was the largest Russian broker by volume. We dealt for all the big global high-frequency prop trading firms trading into Moscow, and we did a lot for sort of tier one PT desks, brokerage services. I did some investment banking, but it was largely brokerage. That was our specialization, prime brokerage and execution brokerage for tier one institutional international clients.
Nice. Sounds great. Very extensive history. Now, that's Tim Bevan in a professional sense. If I was to ask you who is Tim Bevan in a personal sense, what would the answer be?
I'm intellectually curious, right? And
okay,
a lot of the stuff in my career has always been trying to do something new or trying to change the way a market operates. I find that kind of work fascinating. And new products on the LSE was a fantastic place to start the career, right? Because we spent a lot of time thinking about market structure, what makes a good market, how to bring buyer and seller together in a meaningful way, to develop that ecosystem, what new products to bring to that market, how that interacts with the post-trade environment, the legal tax regulatory environment, all the things you have to think about for something to truly work and add value. And then on the brokerage side, when we were working very closely with the Moscow Exchange, I mean, when I first started, it was a very strange market, shall I say, in the way it was organized and the way it operated. It was a very insular, very Russian-only market. And opening that up to international participants and working quite closely with the exchange who developed their market infrastructure to be kind of slightly more internationally interfaceable. But again, around risk management and clearing, they had some unique features that were probably quite positive that certain international markets could learn from. By introducing international high frequency into Moscow, we would fundamentally change that market and the way it operated and the way it behaved. So, that was gratifying. It was interesting having that kind of impact on the way a market operates.
Yeah.
And then with ETC Group, again, trying to find, new ways of adding value to a space. And this just looked like a very elegant solution to provide a much more accessible and frankly safer way to access Bitcoin, which was a fascinating asset. But I'll be honest, I didn't come into this as a Bitcoin maxi. I didn't know much about crypto. I actually came in really because of the structuring solution, which I thought was a very elegant way. When I first looked at Bitcoin, I just saw, wow, this thing trades. And
Yeah.
all my broker ding, ding, ding lights went off. Obviously, since then, I have swallowed the orange pill and learned an awful lot, and I'm enthralled by crypto. But it certainly wasn't really part of the impetus for me to coming into the space.
Yeah, no, firstly, I can definitely attest to the intellectually curious. Me and Tim first met, for context for everyone watching, at a conference called Zubu Live a few months ago. And the first conversation we had was essentially a debate on two things: whether or not you could do instant liquidity for an unbonding period for a staked position, and then also whether you can actually, in a whole fulsome, solution, do staked assets as collateral. They're essentially, for everyone watching and context, financialized products upon staking positions that you may place, and they essentially are capital efficiency gains by tenfold, by some magnitude, especially if you're dealing in sizes that Tim's ex firm did, and also generally what institutional staking firms and institutional crypto firms do nowadays. So can definitely attest to the intellectually curious part, and I'm glad to hear you swallow the orange pill. I'm very glad to hear more people are swallowing the orange pill. On that point, you've kind of alluded to the fact that you joined ETC because you thought the solution was super elegant and maybe not potentially for crypto, but then you did eventually swallow the orange pill. The space is incredibly turbulent. We've seen highs and incredible lows. You've been through, I think, at least 2 bears and 2 bulls in your time, maybe even more. What keeps you motivated in a space that is so turbulent to keep on going?
It is difficult. I mean, when I first joined this particular industry, I found that the hardest thing initially was the noise. It is 100 decibels in your face 24/7. And I think the first thing you really have to learn is how to filter. And there is too much information and noise in the crypto space. And a lot of it's frankly rubbish. And so you have to really learn how to filter and sort of listen to what matters. So that was the first challenge. It was very overwhelming to begin with, the sheer level of information that you have to kind of upload to get familiar with the space. And then the constant noise of kind of innovation and newness and what's happening. Quite a lot to deal with initially. I came in actually. I was a non-exec to begin with because I was still CEO at BCS, which was a very full-time job, and I only joined on a full-time capacity in October 21, so really just at the peak of that bull market. So it was all very exciting at the time, but then reality bit, and through 22, 23, pretty lean years. It's just a change of focus, right? If you're managing a business and the demand collapses, especially for ETF products where you're trying to pitch it to new entrants, to professional market participants, that's a tough gig. So you focus on other parts of the business. Like anything that grows quickly, especially in crypto, your cost base or supply base isn't quite what you need it to be. So we spent a lot of time in 22 focusing on corporate infrastructure, the quality of the operation and management accounting, financial reporting, improving the governance, improving all the core pillars of the firm. looking very carefully at our supplier relationships, trying to rationalize those, but also thinking strategically. So, okay, the market's off right now, but it's going to come back. So, how do I position myself now without spending too much money, because it's tough right now? But how do I position myself to be in a position to take advantage of the market when it comes back? And what do I think that's going to look like? What do I think I need to have in place in order to benefit from the next cycle? And that was quite interesting because in Europe, there's a lot of flexibility in terms of what you can issue versus the
Yes.
States. You can issue on quite a broad range of coin. You can do staked, you can do index. So you're not short of possibility. The question is what's commercially viable. I mean, the point of business at the end of the day is not to issue elegant, interesting products. The name of the game is raising AUM. So we spent a lot of time thinking about the various types of products and the challenges involved in each of those, and trying to do a bunch of first principles work that laid the bedrock to make the marginal issuance process easier and thought through if we felt then there was opportunity. So there was always innovation happening. There was always stuff going on. And a lot of it was, writing quite detailed product development plans and then just putting them on the shelf. So you were still innovating as hard as you ever were. It was just below the waterline because there wasn't the commercial opportunity to bring it to market. So, it never stopped. We never stopped moving in that respect. But again, it's just about emphasis in different market conditions. And
Nice.
it never stopped being interesting, right? Even with all the stuff that was happening. And, with my TradFi hat on when I came in 21, I did observe things that I thought were interesting.
How's that missing? Yeah.
And begin to think, am I going mad? Have the fundamentals of risk reward broken down? Is this need technology rewriting the laws of physics that govern financial markets? And of course, the answer is no. Of course, it isn't. And a lot of those fractures and weaknesses came to bear. And then it's interesting, from a market structure perspective, how does the industry move forward? What lessons are being learned? How can they be fixed? So it never stopped being interesting. It was emotional, but it never stopped being interesting.
Fine, fair enough. I mean, I think that kind of brings me on to my final question. Answered most of them, but you've spoken through the fact that you came into the space and you saw that there was such a huge opportunity, and then really fell in love with the fact that there are so many nuances and so many interesting things that happen in crypto. Quite a loaded question, but if you can answer, it'd be great. What is your ultimate goal in your lifetime, do you think?
Well, I mean, to build interesting stuff, right? I have to do work that I find interesting, and I love financial markets. I love innovation, and I love the impact that technology has on it. I mean, I've been through a few cycles. I remember working at the LSE, and we came into work one morning, and someone said, "Why is the matching engine running slow? And who the hell is Gecko?" And HFT was born. There were a bunch of really big challenges associated with that tech wave. A lot of opposition, HFT pushed back. Specialists and market makers felt their lunch was being eaten, evil HFTs. And that's an example of a big, and it was quite dramatic the way it impacted the market. It didn't evolve quickly. They just turned up. So you have these cycles of things happening and how the market absorbs them, how venues, regulators, and law and tax catch up. And this is another great example of massive epoch level change, technology wave, cultural wave. I mean, it's bigger, if anything, impacting financial markets and looking at how the world reacts to that in different jurisdictions and at what speeds. It's very political as well as everything else. So I think building anything interesting in this environment is what gives me satisfaction. And I just want to keep building interesting product and interesting businesses in financial markets.
That's a perfect segue to the next section, which is being a product person versus being a founder. I think they're very closely aligned, and as you just alluded to, building great products, building great services, that is what building a business is, right? And as long as it's commercially viable, that is how a business is born. Obviously, you mentioned that when you first started your career, you were in product management in London Stock Exchange. How do you think product helped you on your journey to become a founder?
Well, there's always two things, right? There's product and clients. And I've spent a lot of time on the product side, product development, and I've spent a lot of time as a sales guy. I was running prime brokerage sales for a couple of organizations before I took the CEO role. And it's that interface, isn't it? You're there to solve problems. That is the business of any business. If you're not solving a problem for someone, you're not in business, or you're certainly not going to stay in business.
Completely.
So that interface of trying to understand where clients are at, what they're trying to do, what their problems are, what their headaches are, what the structural issues are, and then applying that to product, which is where you can really apply the grey matter to try and conceive business process technology solutions to those problems, is key. But it has to be a feedback loop. Building product in isolation in an ivory tower leads to bad product. Right? It
Yeah.
has to be client-led. And that sort of data extraction from the client side to feed into the product side is an art in itself. You've got to have the right relationships, and you've got to be able to have the right discussions to do that. So I think that's key. It's both sides of the coin. Without a client, you don't have a product, and without a product, you don't have a client. And I've always sort of sat between the two, because that's where the magic happens in terms of building something relevant, meaningful, and hopefully commercial.
Agreed. Completely agreed. And listen, as a product manager myself and one who likes to attend conferences, which is where we met, that is essentially where the insights come out. Like, me and you had a great discussion on both instant liquidity and stake versus collateral. Those are huge capital efficiency gains for all firms across the board: ETPs, ETF providers, institutional desks, anyone. And that, it was born out of the fact that, it was anyway starting to become a trend. But prior to that, there were also other conversations I had at that conference, which were very insightful on, what maybe someone is looking to do with a call or a put on a staked position, which they want to do some exotic stuff with. And it's all very interesting. And I completely agree that without the product manager really being in the weeds and the granularity, I think the role of a product manager is to take the problem and create the most granular solution that is scalable, efficient, reliable for the business on whatever scale it is. So completely agreed. And I think that's one thing in crypto that I find is sometimes a little bit not always congruent with traditional finance and other industries, where we as crypto people think that we know the next solution, or, for example, the current trend is AI agents. For some people, they may think, do you know what? What we need to do is we need to create an AI agent project inside of our business. Sometimes it's not always the trends that last out. Sometimes it's what a client wants, which is something as simple as stake assets as collateral. So super interesting, and completely agree. Now, on a similar path, we spoke about you becoming a founder after becoming a product person, and in between you did director roles, CEO roles, and sales roles. How important do you think becoming a director and becoming a CEO helps you become a founder as well along that path?
Yeah, I think it just gives you the rounded understanding, right? I mean, frankly, a lot of the work of senior management is administrative. You've got to deal with stakeholders, which are owners, equity holders, the board, the regulator, the taxman. All these areas of stakeholder that have to be kept happy and have a shared vision and a shared purpose. Governance is always important. And I actually say this a lot to founders. There's two things I try and get right from the start, which is governance and numbers. Everything else you can kind of fix on the hoof, but if you don't have those pretty locked down from the start, you're riding blind if you don't have the numbers. And without a very clear shared purpose and clear roles and responsibilities and a clear understanding of rules of engagement with stakeholders from the start, you're just building up almost inevitable big problems fairly soon down the track.
Yeah,
I
agreed.
think the managerial stuff just gave me that rounded view, and a lot of it, as I say, quite dull, but understanding the corporate infrastructure and the governance infrastructure in which you can build the interesting stuff, which is the product client stuff. But you have to be conscious of the broader corporate picture in order to develop that successfully as a business.
Yeah, agreed. Next question is one that is going to be top of mind for a lot of the listeners and a lot of the people watching. And I think your advice is definitely something that is going to be very insightful into this, as someone who's gone through, as you said, a number of different roles. For you, what do you think the best role is for early career? Specifically, I'm not talking graduate, postgraduate, graduate role, or we're talking in the first 5 to 10 years of your career as opposed to the first 5.
Well, look, there's no one answer to that, right? There's
Fine.
lots of different paths to a very successful career. And whatever decision you make, you're not bound by anything. So it's organic, and it's at any point you can make decisions and change and pivot. In any position, you may have luck in and get incredible experience, or find an incredible mentor, or find incredible exposure to some aspect of business or the market. So, to say there's one answer, I think is misleading, and you have more power at various stages to.
But in your opinion, if you had to pick, if you had to say, this is my nephew or my niece or someone, and they are 24, they have to find a new job, they've got greenfield, great experience, maybe went to a top 10 university, what would you say? You should look into this, or you should look into this.
Well, look, the two biggies are finance and tech, right? I mean, that seems to be where the money's at. Maybe law as well, looking at how well they've been doing recently. It's got to be something that interests you. I always think, do what you're passionate about, and the money will follow. If you try and forge a path down something that you're not really 100% committed to, you'll find it very difficult to be successful. You kind of got to give your body and soul to something. So you have to believe in it. You have to be interested by it. So I wouldn't try and be too tactical. I genuinely follow your heart. React to what interests you or tweaks the bits of your brain that get engaged, and pursue that. Because if you have a genuine interest and passion for something, well, it's more likely to be successful. And then, success can come from any angle, but I wouldn't be too prescriptive. Obviously now technology, math is way more prevalent in terms of desired skill set or necessary skill set, given the way the economy is developing, and the really powerful, ubiquitous impact that technology has. But, it depends on your interest. I found financial markets fascinating. I still do. And I've been very fortunate to work in businesses that have really excited me for that reason. But that's my path.
Okay, fair enough. That's great. And I think I agree. I was just pushing you hard to get an answer out of you, but I think finance and tech makes sense. Cool. We'll go straight on to the next section, which is a quick fire round. I do this every single episode, and it's always quite interesting to hear the various insights from the guests. I think the first question, and I think I'm gonna preempt the answer, but I think the first question I'm gonna ask is, what is your top tip for crypto exposure? And my bet is going to say you're going to ETFs.
Well, no, I'd say, first of all, invest, don't trade, right? Unless you really are quite professional or have a trading strategy, I would get my exposure and sit on it. Trying to guess short-term gyrations in crypto, good luck, right? It's like trying to guess short-term FX. No one's ever done it successfully unless you've got extraordinarily powerful computers and some incredibly good quant maths brains behind you, or you're extraordinarily lucky. So trading it, from a PA perspective, I wouldn't. If you've got conviction in something, you buy it and you hold on to it. And then it's all about risk appetite and how much you know. I think we all understand in crypto there's Bitcoin and there's everything else. They're quite distinct. Bitcoin's a core holding for me. Now, I like to hold it in the ETF because I can hold it in a tax-free wrapper. I can hold it in my ISA or my SIP. So for me to have a long-term exposure to Bitcoin in a tax-efficient wrapper makes sense. There are good arguments for holding it not in an ETF, because potentially then I can sweat the asset and do other things if I'm interested in doing that. So there's no right answer. It depends on your infrastructure setup. Now,
Fair enough.
I'm approaching 50. I'm quite old school. The thought of self-custody terrifies me.
Not your keys, not your coins. So fair enough.
Well, then again, I've happily used the bank for my cash. I've happily used the custodian for my securities, and I'm reasonably comfortable with that model. For me, the ETF makes a lot of sense, but it's not right for everyone. And certainly you have much more flexibility if you have the underlying asset in terms of what you can do with it. So yeah, core holdings, not too much moving around. And then it's really a risk appetite question. I stick to the large caps. I occasionally punt on something that I find interesting. I can't say I've been particularly successful at that.
Okay.
So I'm afraid when it comes to my crypto portfolio, it's pretty dull, and it's pretty.
Fair enough. think I agree. I think in the sense that as long as you are happy with the counterparty risk, or in general, the default risk or bankruptcy remote risk, whatever we want to call it, of a custodian, all for it. I, as a person who's a very crypto fundamentalist and like to call myself crypto fundamentalist, believe in not your keys, not your coins, and I always, if I can, will self custody in any scenario where I can, because I trust myself more than a custodian. But yeah, I could also say I have enough domain and tech expertise to know that I can get myself out of that situation if I ever get into a bad one. So also rely on myself in that sense. Cool. And then coming on to a very important question, I think one that I have a high level understanding of, but in the granularity, is very, very difficult to understand and requires a lot of domain expertise which you possess. If you can, in 60 seconds or less, describe the difference between an ETF, an ETP, and an ETN.
Right, okay. Well, ETP is the catch-all, exchange traded product, right? So that captures everything. The rest of it really comes down to legal structure. And it's quite interesting, actually, because the US ETFs, they're not funds, they're trusts. But they're called ETFs because it's accepted that that's an ETF in the States. In Europe, an ETF is really largely understood to be a UCITS fund. And there are other ETFs out there that are non-UCITS funds, which I think is a bit cheeky sometimes, because if you call it an ETF, you're heavily implying this is a UCITS product, which is the standard European definition of an ETF. Now, ETNs, exchange traded notes, or ETCs, exchange traded commodities, they all use a different structure whereby the underlying asset isn't a fund. Sorry, not the underlying, but the asset isn't a fund, it's not structured as a fund, it's structured as a security, a debt instrument. And that debt instrument effectively gives you rights to the underlying asset. So mechanically, these things are identical. They have a create and redeem process. They're open-ended, and mechanically they all operate the same way in terms of pricing, but the legal structure is different. And you do have to be careful, right? When you look at the structure of a product in terms of investor protection, the layers of sort of security and counterparty credit, or what's going on with the hedge asset, is important. So there's no one legal structure necessarily that is better than another. Mm-hmm. It's really structuring beneath it. Okay, so I can structure this as a security, but the asset that it's over, the Bitcoin, can that be lent, and does that have to be held in regulated custodian? Third party, fourth party checks and controls do I have about movements in and out? So, the structural integrity of a product is very important, and you really have to do your own research here to make sure that the product does what it says on the tin. But I wouldn't say necessarily one is inherently better than the other.
No, agreed.
Right, in terms of legal structure, whether it's a security, a fund, or a trust, but there is variance in terms of quality based on underlying structural issues.
Nice. That was 2 minutes, but I think the insights were good enough that we can give you 2 minutes to explain that.
Thank
you. Nice. I guess that brings us actually very perfectly on to the next topic that I was going to bring up, which was getting a little bit deeper into crypto ETF and ETF products and the general, scene of the market. The other day, obviously, Bitwise, who were the acquirer of ETC Group, came out with I think it's the S121 is the petition that you have put in for an ETF for a Dogecoin ETF. Now, in your eyes, as someone who has been deeply entrenched in this market for a while now, how large do you think the asset class for crypto ETFs can go? And at what point do you think ETF issuers say that's enough, or we need more?
It's an interesting one. On a price return basis, I think the market's going to go 5-10x over the next 5 years, right? So price is going to do a lot. If you assume, like I do, that Bitcoin's going to at least get to somewhere between 0.5 and 1 million a Bitcoin, then you don't have to gather much asset. You just have to sit on it to see big things happen. Demand's interesting because, again, in Europe, we didn't have the product constraints. So whereas the US market has been horribly constrained and products been allowed bit by bit to a very hotly anticipating environment, in Europe we were able to do stuff, and it's been interesting the traction, and really that's been limited I think to outside of retail to Bitcoin and perhaps Ethereum, maybe an index product, But the appetite from the institutional market to go beyond that at this stage, I don't see it. I haven't seen it really to date. Retail's different. Retail's powerful. I mean, it's still the biggest component of the industry. I mean, I'd say really that if you look at crypto ETF AUM, it's mostly retail. The rest is mostly hedge fund, and there's a bit of institutional. Certainly, that's the case in Europe. US, I think it's definitely much broader now,
Yeah.
With a decent chunk of Bitcoin on the basis trade against CME, obviously as well.
Mm-hmm.
So the question is, is the demand there for innovation? Now, I think you're going to inevitably see in Europe some structured, probably 2x levered, 3x levered. You may see some other simple structures, maybe covered call strategy, maybe FX hedged, some variations on Bitcoin to try and find different pockets of demand in Europe
Mm-hmm.
based on the geographical preferences of different investor groups. So you'll see some variance on Bitcoin for sure. Ethereum, yeah, I mean, look, you have to be buying a total return Ethereum exposure, right? I mean, it's like buying an equity and leaving the dividend on the table. Who does that? So, given the risk reward profile of staking, unless you're baking in staking rewards, you're not getting the
Doesn't
economics of
make
the
sense.
asset, which is a bit mad. Now, there are structural challenges with that. Especially
Lots.
scaling around the liquidity bridging issues that we talked about in depth. But I think that that has to be solved. But again, look, once you're outside the big two, I do think index is the way to go. You've got to spread your risk. You don't know. You don't know which layer one is going to shoot the lights out, right? You don't know which of these subsectors. So I think sectoral index or thematic index products should have a place, right?
Yeah.
Because take the Trump event. I want to buy a DeFi protocol ETF because that's the one that's going to get the biggest reg hit. I can play themes. I don't have to decide which particular one I want to trade. So I do think those trading products, sector ETFs, have a place in the market.
Yeah, completely.
But again, the number of people actively trading this market has to grow, and the institutional market is slow, and it's still very slow. Certainly in Europe, I think it's slower than a lot of people care to admit. I don't see major structural shifts in terms of European allocation at this stage.
Mm-hmm.
US, different story. I mean, that's moving. You can see it, not just
Yeah.
institutional, the corporate level, everything else. But even there, I think it can get overstated, right? The speed at which it's actually happening.
Yeah.
So product diversity, I think, goes along fairly obvious lines. A bit of structured. I would have thought index would be a growth area. How many individual protocols down the list you can go, I'm less clear.
Yeah. No, listen, prior to working where I work now, I worked at a business called Bitpanda. They now have a number of indexes that are thematic. They also have a number of indexes that are much more vanilla, top 100, top 250 by market cap in the crypto market, basically. And those do incredibly well, surprisingly enough, with even retail users. They want that diversification. They don't want to. Same thing with the classic S&P 500. Think you're
Well, of
£500 a
course,
month.
I mean,
It's
you
the
want to
exact
buy the
same thing.
market or buy a theme. It surprised me actually that sort of on-chain sort of index products didn't get much traction within the
I
crypto
agree.
world. I would have thought for the same reasons that would have been more interesting product. I mean, the one that seems to have really broken through is the CoinDesk 20. They've got
Yes.
that incredibly liquid perk now, and that's the first one that's really gained traction, I think. So that's
Yeah.
one to watch quite closely.
Yeah, agreed. And no, and I mean, talking about layer ones, I'm quite a big advocate for Solana, and I know there are some structured product offerings on Solana. And yeah, I'm also very surprised they haven't taken off in the way that I would have expected. They are firms that had, huge. I went to Solana Breakpoint, not this year, but the year before in 23. And when I was there, I spoke to the company who I'm talking about who do structured products. Some of the sales updates or traction updates that he was giving me, I was very surprised about. I was very interested to hear that it's not picking up as quickly as they thought, even till this day. The TVL, or in your world, you call AUM, we call TVL, same thing, is it's still quite minute compared to everything else. So
Well, I do
yeah,
think, I mean, I think this market is actually smaller than most people think. Certainly those
I
that
think I
within it
agree.
put it that way.
Egos for sure. Somewhere, everywhere, there's always an ego. Great to talk more about Europe and your point on the fact that we think the European market is sometimes bigger and sometimes more quicker to innovate than we think, which sometimes it's not. That landscape for crypto in Europe is obviously quite different to the US and even APAC. Why do you think that is? Is it a regulatory thing? Do you think it's the market participants don't have as much risk that they
Well,
want to take on appetite, or what is it? Do you think?
Europe's a bit of a misnomer, right? We talk about Europe, but it's very fragmented. It's very jurisdictionally specific. I mean, we had this issue that you deal with a jurisdiction like Germany or Switzerland, where the regulator's been quasi neutral, or in the Swiss case, maybe even positive. And you compare that with the mood music that was coming from Bank of England and FCA in the UK over the past 3 years. Tone comes from the top, right? That colours opinion all the way down. And, it's still markedly more hostile in the UK amongst the broader general financial and public in terms of their attitude towards this space than in other jurisdictions. It is not a homogenized place by any stretch of the
No
imagination.
way. Yeah.
And there is pan-European financial regulation, but a hell of a lot is done at the national level. And it's quite, again, diverse and quirky, and different tax regimes, etc. So Europe's tricky. You've got very different jurisdictions, very different cultures, and the way that financial product is set up and distributed varies markedly, and who's incentivized to distribute what and how. It's a much trickier proposition to address the European market.
Agreed.
I think a lot of outsiders realize. That said, there is huge growth potential, and I know certainly I was noting last year that Italy was coming online in a big way in terms of interest, and some significant pockets of investment there. So Europe's doing its thing of coming along in this kind of disjointed, jerky way, which means it never collectively moves fast. But there is pockets of real opportunity within that area.
Yeah, agreed.
US is just a standalone, right? I mean, nothing comes close to the depth, the breadth of US capital markets. And you always think of US as a 10x on Europe. It isn't just about every respect, size of market, liquidity, just impact. And now with this incredibly positive tailwind around the change of regime, which we all know about, it's the undisputed leader at this stage. Obviously, we've got to see what actually results from this over the coming months. But yeah, I mean, that's obviously where the action's at.
Agreed. Makes sense. I guess you've answered it throughout our conversation about being a crypto fundamentalist and swallowing the orange pill. I guess you can answer this in two ways, but whichever way you prefer. What products do you think are missing from the crypto market from a product perspective? And that can be either in the lens of something on chain, it could be a financial product that you think is missing, or just tech infrastructure that you think crypto is missing compared to your expertise in capital markets.
Yeah, I mean, fundamentally, the rails between crypto and traditional finance aren't strong enough, and it's actually inhibiting the growth of crypto. So we have a market that was very bottom up driven by extraordinarily talented people, but had visions of almost rebuilding a financial system away from traditional finance. And some of that's happening. There's a generation now that maybe largely economically operates in that sphere as opposed to the traditional finance one. But I think the reality is crypto is going to have to move into traditional finance and then revolutionize it from the inside out.
Agreed. I think payments is step number one. I think payments is step number one for that.
Well, 100%, right? I mean, payment rails, true network effect can only be achieved from within the financial system, not without. And for me at the moment, if I look at the crypto market, and I've been speaking to a lot of participants over the past couple of months, it's really a capitally constrained market. It's horribly capitally inefficient. The way the market infrastructure works, the way movement settlement works, the way collateralization works across all the various platforms. It's a horribly inefficient market. And this is one of the big drawbacks of decentralization, some sort of centralized clearing, netting, settlement. The benefits that gives you is huge. When people say, oh, instantaneous settlement, I'm thinking, Christ, who wants that? If I can't net settle, I'm dead. I have to have a wall of assets and cash to settle my orders and obligations in the markets. We've got to look at market structure. And actually, if we're honest, the market structure hasn't changed really much in the last 5 years. The result of XTX and others were huge improvements in governance and transparency and sort of professionalism. But structurally, I don't think things have really changed that significantly. And you get innovations, restaking and other things where people are fiddling and tweaking to try and make things more efficient. But there's a big structural elephant in the room. And I don't think this market can grow without significant inflow of wholesale capital. And that takes significant structural change. So I think over the next, and the other thing about Trump is, everyone's going, oh, brilliant, brilliant for crypto. What he's actually done, he's opened the gate to TradFi to come and steal lunch, right? So if I'm operating in the crypto space right now, State Street's just been let out the blocks. Am I cool with that, or am I actually deeply nervous? So I think now regulation is coming. I mean, to a point, regulation just pushed crypto away, and now it's coming. Now it's on. So I think you're going to find crypto market structure looks very TradFi in 3 to 5 years' time.
I think I completely agree. Completely agree.
Such a bad thing, because the TradFi model developed over 200 years for a reason, right? I mean, it wasn't just made up. That's what I see happening now. I see authorized clearinghouses. I see centralized settlement.
Yeah.
I see.
You see some of the clearinghouses now. You see cash settled perp on onshore cash settled perps derivatives products that are coming out of like the Netherlands. Netherlands have been a very friendly, very friendly jurisdiction to these types of products, and especially to crypto, like issuing MiFID II licenses to a number of these like providers. So yeah, completely. I guess we don't have much time left, so I want to get into the next two sections, and then I shall let you go because I know you have a lot on. Obviously, you were the ex-founder and ex-CEO of ETC Group that was acquired by Bitwise. How was the process of being acquired? We hear a lot in the news, X was acquired, Y was acquired, but how was the actual process for you?
It's heavy lifting, quite sensibly. There's a lot of due diligence involved. And that's quite a painful process, right? It's a big stress on the business in terms of resource pool. It can be, extraordinarily granular. And I would say to sort of any founder with one future eye on an exit is maintain your records, do your admin, right? Get the governance right, because it's an awfully painful thing to unpick or find or fix further down the track. So good business administration, as dull as it sounds, equals a much cleaner and more successful exit, because if people find problems or find gaps or whatever, they're knocking down your price, right? They're knocking down your price. You're a bigger risk, and therefore you can significantly damage the valuation of your business if you haven't administered it properly.
Agreed.
So that is a heavy lift, and it's quite painful. And yeah, I mean, it's a bit of a dance, right? Of agreeing a price on the one side, and then making sure that everyone sees it through to the end and getting it done and over the line. So, it's a fascinating process. I mean, I think, having a really good M&A lawyer team that you're working with, or a good advisor you're working with, is key. So, that selection process should be really thought about. Kind of got to get on with them at a personal level as well. And then there's the stakeholder management, right? I mean, it's easy if there's one or two significant shareholders that are directing everything, but if it's a broader church, then you've got to think very carefully about operating through the board and the shareholders to build consensus and keep consensus.
Agreed.
And get over the line. So it was interesting. There was a lot more sort of granular sweat capital involved than perhaps I'd realized beforehand.
Were there any unknown knowns or parts that surprised you to the process? If you can talk about whatever you can talk about.
Well, I can talk about it generically. I just think that there's not one thing that is super wow didn't see this coming, but there are hundreds of items that all require quite specific pernickety care. And therefore, to have the team of people and the project management around it has to be excellent. You've got a lot of little plates spinning. And in terms of the internal team that's dealing with that, dealing with advisors, dealing with buyer, dealing with internal stakeholders, the project management around the process has to be excellent, because it is a complex project to manage. And that would be the biggest learning I took away from it.
Okay, fair enough. That makes complete sense. And you've already given your 2 cents on what you think other founders who are looking to exit. Good admin, good business administration. I guess that brings us to my final, but arguably most important question. What's next for Tim after ETC Group? What would you like to build? What would you like to do? I'm sure the audience is so interested to hear, after exiting a business, what you're on to next.
Yeah, well, I'm having numerous conversations with different parties about various ideas and opportunities. I go back to the point I was making a bit earlier around market structure and what I consider some of the elephants in the room in terms of how to fix that bridge between wholesale capital and crypto, how to deal with the fact that the tier one banks don't participate. These are the big elephants in the room. And until that happens, the market can't get to a relevant size. And that's when the innovation starts to speak, because we have fundamentally a bigger market, a more relevant market, a more networked market than we do today. And then once that happens, and a lot of crypto purists will be horrified by what I'm saying,
yes,
then the application of the technology and the uniqueness of what's possible utilizing this will actually come to life more. I think it has to move that way to come this way. And, getting it ingrained into the traditional finance system is then a means to change that system and innovate and break from within. But trying to innovate and break from the outside generally just means you're screaming at a wall. So I'm looking at market structure, I'm looking at wholesale financing, I'm looking at that area of the market to kind of think about what solutions look like and potentially who's best placed to provide them.
Nice. Cool. Well, on that note of a hopefully positive and hopeful outlook on where crypto market structures and crypto markets will go, we'll leave it there. Thank you so much, Tim, for your time. Thank you so much for your insights. It was super interesting. I really enjoyed the episode. For everyone else will. And yeah, thanks for coming on.
Thanks, Ed. I really enjoyed it.